Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 86 on November 3rd, 2019. I'm your host, Eric, and in this week's show, we will cover the trades from last week on Smile Direct Club, IBM, and the Semiconductor ETF. And this week, we discussed three new trades on Viking Therapeutics, the SPDR Gold Trust ETF, and American Airlines. Now, it's always great to hear from listeners, so if you have any questions about the trades presented here, or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a short video series to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit our YouTube channel for the Weekly Option. Now, this week was marked by earnings reports and a Federal Reserve rate cut, another one. The Dow Jones Industrial Average grew 389 points, ending the week at 27,347 points. The S&P 500 index added 44 points, closing at 3,066 points on Friday. Now, the topic of the week is sponsored by the Option Studio. If you want to learn to trade options without any calculus and confusing language, visit the website to learn more about the online course. Visit www.theoptionstudio.com for more information. Now, this week, we're actually going to take a break from the topic of the week. Join us next week for more topics of the week. I'm trying to record a quick show. This will be a much shorter show, and that's because I spent the weekend at a bit of a retreat, and I arrived home this evening and just want to really get this recording finished and posted so that those of you who like to hear this podcast before the opening bell on Monday morning will have a chance to do so. And hopefully you guys enjoyed that extra hour of sleep last night. It's always nice to fall back, turn those clocks back, and get a little bit more sunshine in the morning. So let's dive into the trade review from last week. We're going to start with the covered call on Smile Direct Club, symbol S as in Sierra, D as in Delta, C as in Charlie. Stock last week was $11.38, and we bought that stock and looked to sell the November 12 half call at 85 cents, hoping for a 17.31% return in 3 weeks. SDC stock rose $1.14 per share, finishing the week at $12.52 per share. The call that we sold is now in the money, and if you close the trade right now by buying that call back and selling the stock, you would lock in 64 cents on the week. So not bad for a 1 week trade. However, if you hold on to the trade until the stock is exercised or until expiration, with stock at this price, you will make $1.97 per share. So this trade worked out. That's a 17.31% gain if stock remains above $12.50 through November expiration, which is in 2 weeks. So nice trade. Our second trade on the week was a credit spread on International Business Machines, IBM, symbol India Bravo Mike, IBM. The stock last week was $135.44, and we looked at selling that November 134 put spread at 46 cents, which can yield a maximum loss of 54 cents per spread. Now, this was a pretty rich spread, and I was happy to sell it. Shares of IBM over this week rose 9 cents per share, closing at $153.53 per share. The out-of-the-money put spread we sold is still out of the money. Now, if you tried to buy back, you would lose 12 cents per spread, and if you were to try to add to the spread, meaning you would try to sell more, you would collect 44 cents per spread, which is 2 cents less than what we did. So they've lowered the value of that spread. Now, if shares of IBM grow stronger over the next 2 weeks, this trade is going to depreciate significantly, leaving us with this nice profit of 46 cents per spread. So at this point, no adjustments needed. Stock actually rose and is moving in the direction we want. Hopefully we'll get another couple of weeks of rising stock, and we'll be able to walk away keeping that full premium for this put spread that we sold. And then the final trade from last week was a debit spread on the Semiconductor ETF, symbol SMH, S as in Sierra, M as in Mike, H as in Hotel. The stock at the end of the week last week at $127.03 per share. We looked at buying that November 126 half, 127 call spread, paying 32 cents, which can yield a maximum gain of 18 cents or 56.25% return in 3 weeks. While shares of SMH rose $3.09, quite a bit this week, finishing at $130.12 per share. The in-the-money call spread we purchased is now even more in the money. So if you tried to exit this trade today, you would actually lose 7 cents per spread, and that's just because of the bid-ask spread. However, if you hold on to this trade for 2 more weeks, as long as the price per share is above $127 per share, you will gain the 18 cents per spread, which is a 56.25% return on your capital. Again, that's only 2 weeks away, so fantastic trade. We were 3 for 3 last week. Let's take a look at this week's trades, and we'll wrap the show up for the week. So this week, we're looking at a cover call on Viking Therapeutics, Inc., symbol VKTX, V as in Victor, K as in Kilo, T as in Tango, X as in X-ray. Stock ended the week at $6.72 per share. I'm looking at buying that stock and selling the November 7 call at 60 cents. Now, you enter this trade by buying Viking stock for $6.72, and you sell the November 7 call at 60 cents. This trade makes the most money if stock prices finish above $7 per share, and the break-even price is $6.12 per share. And we're hoping for a 13.10% return in 2 weeks. So that's a pretty good return, and hopefully we'll be able to walk away having made it. Now let's look at the credit spread for this week. We're looking at the SPDR Gold Trust ETF, symbol GLD, G as in Golf, L as in Lima, D as in Delta. The stock ended the week at $142.56 per share. I'm looking at selling the November 142, 141 half put spread, collecting 19 cents per spread, and that yields a maximum possible loss of 31 cents per spread. Now you enter this trade by selling the November 142 put at 89 cents and concurrently buying the November 141 half put for 70 cents. This is a credit spread because we are selling the spread, and this trade makes the most money if stock prices finish above $142 per share. The break-even price is $141.81. The final trade for the week is our debit spread. We looked at American Airlines, symbol AAL, A as in Alpha, A as in Alpha, L as in Lima. Stock ended the week at $30.56 per share, and I'm looking at buying the November 30 and a half call spread, paying 31 cents. That leaves us with the maximum possible gain of 19 cents or a 61.29% return on your capital in 2 weeks. Now you enter this trade by buying the November 30 call for 95 cents and selling the November 30 half call at 64 cents. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices stay above $30.50 per share. Break-even price on this trade is $30.31. So that's it for this week's show. Thank you so much for listening. Hopefully I didn't get it in too late for you, but we'll have a full show next weekend. Have an amazing week. Happy trading. Bye-bye. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer: there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.